Mayank Shah is the Senior Category Head at Parle Products and now joins us live on the show. Thanks so much for taking time out. I want to begin by addressing the fact that wheat prices are at a 6-month high. Do you think that this is a bit of a worry for the company, and how are you looking to alleviate concerns on the high wheat price front?
Yeah, so wheat prices are definitely a little bit of concern, especially if you look at the run-up of prices in last 1.5 months. There's an increase of almost about 7 to 8% in wheat prices. As a result of which, there's a bit of pressure on the bottom line. However, the other key ingredient, which is edible oil, is down compared to last year, which is a saving grace. So net, the impact is not as much as one would expect because wheat happens to be a key ingredient. But it should not move further up from here is what our concern is. And we are pretty hopeful about it, given that the crop was good, although government was not able to mop up, for their through FCI, the quantum of wheat that they wanted. But we expect that, given the measures that government has taken off late in terms of hoarding of wheat and stuff like that, wheat would be freely available, and the prices would be relatively stable. They may not, shoot up any further. So that's our outlook on wheat is concerned. And as far as margins are concerned, currently that's not as much a concern. But yeah, it would be a concern if wheat prices continue to rise.
But in that eventuality, Mayank, what is the company's strategy if wheat prices continue to hold out or escalate from the current levels as well? Do you pass it on to the consumers? And have you already done that?
Yeah, so if you look at, inflation scenario last year, I think, it was a major challenge last year, and inflation was unprecedented as far as certain inputs, for food items were concerned, especially edible oil. And given that, I think most companies had taken price correctives last year. However, if you look at, the major ingredient which had gone up last year, which was edible oil, that has cooled down. It has come down from all-time high of about 175 rupees to, 95, 98 rupees today. And as a result of which, I think there is a much needed respite. And most companies have passed it back. In fact, almost all companies have passed back that savings to consumers through either, consumer offers or reduction in MRP. If they are bigger packs, it's through reduction in MRPs. If they are smaller packs, in terms of consumer promotions by giving a little extra weight free to consumers. So they've passed it back. There might be a bit of rationalization that might happen, if we continue seeing a rise in wheat prices.
Mayank, I want to understand how's your distribution, across the country reacting, or even the demand. I want to gauge your business partners across the country and even your target audience. How are they on the demand front? If you indeed go ahead and hike the prices even mildly, would there be acceptance, or it's a pushback there?
It should not be, because what happened last year was when we increased the prices. Yes, volumes did get affected, and I think one of the major reasons why most companies are passing back the reduction in input cost is to gain back volumes. While value growth is coming, the biggest challenge ahead of most companies, as we all know, in last quarter has been volume growth. So volume has not been growing. The growth that's coming is primarily driven by increase in prices. Volume growth is either flat or, at most, just 1 or 2%, or more than that. And just to get the volume growth back, I think companies are passing back. So there has been some sort of resistance, as you rightly said, in terms of increase in prices. But just to mitigate that, companies are passing back the reduction in input cost to consumers to drive volumes. Now, if we reduce that freebie or promotion that's being given or passback that's currently given to consumers, there might be a little bit of impact on volumes. But then we need to understand it's always a relative. So, biscuits don't operate in isolation. They operate as a part of, a larger snacking assortment. So, if the impact of input cost increases across the board, across multiple segments of food or processed food or snacks, then I think, the impact would be marginal. But let's say, in case of wheat, which becomes primary or key input in biscuits, not so much into namkeens and other things. If that's only going up, and if biscuits are the only category which are taking a price hike or reducing the passback that they are giving right now, there might be a little bit of impact on volumes.
Mike, before I let you go, just wanted to understand the consumer pattern and behavior as well in these times of escalated food inflation, if you will. I mean, is it more the mass or the premium biscuits which are finding favor, or, smaller packs, for instance, which accounts for around 50% of your overall sales? Are consumers then shifting to those?
Yeah, so both of them, in fact. So, a good thing right now is that the volume, we are getting back the volume growth because of passing on the benefit of lower input cost through extra weight and reduction in MRP. Urban India was doing very well. It has been doing well since last almost about 7-8 quarters. And if you look at rural India has started, gaining traction in last 1 quarter. So there is a revival of demand that's happening in rural India, and it's further aided by the additional passback that companies are offering because of the reduction in input cost. So currently, both of them are growing, and since both geographies, as in urban as well as rural, are growing, both value product as well as premium products are doing well. Till about a quarter back, premium products were doing well, and there was a pressure on value products. But now, as we currently speak, because there is a revival of demand that we are seeing in the rural, we are seeing traction across both premium as well as value offerings.
Good to have you on board. Thanks so much, Mayank, for giving us that perspective with respect to how business is shaping up. So yes, there is a bit of pressure on the bottom line on account of the increase in wheat prices, but that will be offset with palm oil prices dropping.